Good afternoon, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago. Talking metals, let's talk gold again today, 1341. A small pullback. This is a virtually unchanged gold market, and the market moves basically right back down to its breakout level. That breakout area was around 1338 or so when we finally broke out. The pullback we've had over the last couple of days has taken us right back to that level. That's generally a basing pattern, but as you know, in the other markets, quite a bit going on today. It's surprising with the sell-off that we've gotten in the equity markets that gold isn't much higher than it is now. Now, a lot of that may have to do with the dollar. The dollar's also slightly lower, but it is stable, and the dollar's just kind of pausing, awaiting the State of the Union address tonight. And again, we are in the midst of a two-day FOMC meeting as well. Granted, talking to the FOMC meeting, it is Janet Yellen's last meeting. There's unlikely to be anything dramatic that comes out of it. But when you combine it with the idea, I could call it a fact, that the executive branch is really what started the dollar decline in January. Steve Mnuchin's comments accelerated it. Both tried to walk it back. President and the secretary both tried to walk it back last week in Davos, didn't have much success doing that. So the State of the Union address tonight is really where the dollar is hinged. The dollar has not gotten stronger. It is slightly lower today, but again, it's sort of at that base level that it's been making below 90 in the dollar index. So it would take a lot to get it to pop back up. I don't believe the dollar is going to necessarily believe purely from the State of the Union address that it should turn around and rally. But it essentially keeps a base to gold as it gets weak because, again, a weaker dollar provides a little bit of stability to commodity prices. Gold is also getting a little bit of stability from the VIX. Again, we are lower today, but that breakout level, that sort of 38, 37 level that we're sitting on right now, just prior to the close rather, the rally continues off of this VIX, coming up now 2 days in a row and getting above 15 on the VIX for the first time since August of 2017. It's pretty significant in the way that the VIX has kind of rolled over. Again, if the VIX starts to spike, you should see gold rally with it. We've seen a pretty good gold rally without the VIX making this move. With the VIX, similar to the weaker dollar, it should kind of put a floor underneath the gold market. This is Bob Iaccino talking gold futures from the CME Group trading floor in Chicago.